Right, ZM everyone, how are you? So, I'm Jarvis. I'm CEO and co-founder of Krystal. So we are a liquidity management platform. So we have users to farm liquidity on decentralized exchanges on both Solana and EVM. So today we have a topic on DeFi renaissance, a return to first principles. So I guess the first DeFi summer has been for 4 years, right? So during the time a lot of things has changed. So I think for the discussion today is going to be a good time for a reflection on what has been going for DeFi and what changed, what's not, and what is the core principle of DeFi, right? And joining us today, we have Vinson from Momentum, we have Ranchi from Orderly Network, and we have Coby from General Finance. So let's start by a quick introductions.
Yes, hey guys. So I'm Vinny, the CSO of Momentum. We are the central liquidity engine of the Sui ecosystem. Many of you know us because we have the leading DEX on Sui, but we do have a lot of other products. We're also the flagship multi-sig solution for Sui, Aptos, and Movement. And we are also launching a lot of new products under the liquidity engine. We'll be launching the first vaults on the Sui ecosystem as well.
I'm Ran, co-founder of Orderly. Thank you. Some of our team. We're an omni-chain liquidity protocol focused on perps, live on 16, could be 18 different chains, shared order book across them. And we have 58 builders on top of us, including What Exchange sitting over there. And as of yesterday, we ranked number 3 in terms of volumes on DeFi Llama for perps. Traded a bit over 600 million in volumes yesterday. And we have over 120 markets, perps markets listed. And we also have a flagship, what we call Omni Vault, which is kind of like Hyperliquid HLP, that's been growing a lot in TVL and in returns recently. Great to be here. Thank you.
Hi, I'm Coby Lim. So just a little background, I was from the TradFi space, and then I headed a few OTC institutional desks within the crypto space, and most recently in blockchain.com, heading the spot desk there. So I am now currently the co-founder of Ranger Finance. What we are an aggregated platform. We aggregate perps across Solana. We aggregate spot over 4 to 5 multiple different venues, and very soon we'll be integrating Hyperliquid too. So I think a lot of things have been going on for us. We are quite excited, and we've also just launched our season 1 just 3 weeks ago. So yeah, in a nutshell, that's what I am, and Ranger. Yeah.
Okay, great. So I think let's get started on the lead-up question. So the first question is going to be for overview. So back during DeFi summer, 4 years ago, right? So we started with a motivation to change the financial system, right? So we want to replace the TradFi with something 10x better, more permissionless and more decentralized, right? However, right now I think it's more we are working together with TradFi some way, right? So my question is, what is the value proposition of DeFi today, and what have been changing in the last 4 years compared to the what we wanted originally, and what is still there?
Yeah, so I think the vision of being open and permissionless, that hasn't changed. What's changed now is because of a lot of black swan events, things like Luna and FTX, rather than the industry operating in the gray, they've erred on the side of caution. Now they're waiting for regulation. And now we've had a lot of movement with MiCA in Europe and the GNS Act in the US. That started to legitimize a lot of things like stable coins, right, and DeFi in the space. So the reality here is because regulation is now leading things, really comes down to a lot of the traditional TradeFi players coming to the space first, and that's really what we've seen happen in these last couple of years.
Anyone?
I think it's becoming more and more apparent that all of finance should be on-chain. I think that's already happening, starting with crypto. You're seeing the price discovery of assets like meme coins that happened on-chain for kind of the first time this cycle, on Solana. And we are seeing more yields that are created on-chain, and also tokenization of assets, right? So you're seeing traditional assets coming on-chain through RWAs. And with chains increasing in scalability and decreasing in cost, I think it's a matter of time before all assets eventually shift to on-chain, where it's just a lot more transparent and low cost, bypassing a lot of the traditional middleman. So that's happened. The biggest product market fit is stablecoins, right? That's heavily disrupting traditional remittances banks. And we're starting to see this in terms of trading, in terms of lending markets, asset management even. I think it's a matter of time, like shorter than we think that, and you have all these RWAs on chain, right? So I think the trajectory is definitely in that direction. And as technology scales and as regulations mature, it's just going to keep happening. And I think we're going to see less and less reliance on traditional centralized infrastructure, including in TradFi.
Yeah. So I think for the DeFi side of things, if you compare 4 years ago and now, a lot of things have changed. I think 4 years ago, everyone was trying to figure out what is DeFi really used for, like what exactly it is. I think there were a lot of talk on yields when it was back in DeFi summer back then. But now it's a lot, I would say the narrative is still there, but I think the focus has kind of shifted to how things can be a lot more accessible. So, users can, easily get on board to such opportunities without going through lengthy KYC processes. But of course, the regulations would have a play, travel rule and all this thing that's coming in. So you see that I think accessibility is one thing, and I would say ability to move assets around, assets that are custodied by you yourself. I think that's also an important thing now in light of whatever has happened over the past 4 or 5 years. And glad that all of us have picked up from all these events, and we have learned and improved. And even now, we look at it, we've grown a lot stronger since 2 years ago, since 4 years ago.
Yeah, so I guess the core principle is still there, right? Transparency, efficiency, scalability, accessibility, and probably it's just more and more application. And I think we shouldn't compare between TradFi and DeFi anymore, because it's still finance, and we are more apply blockchain and decentralization and to make it better, right? So to the second question, I want to ask Ranzi specifically, but anyone want to answer, you can jump in. So right, so in the early day of DeFi, right, we saw explosion of fork, right, and remixing and a lot of clones, right. So in some way, we have a lot of decentralized applications. Not all of them work, right. But I think that's one of the things that can push us moving fast. So and everything is based on open source code, right, and permissionless innovation. However, for the recent years, I'm seeing more and more closed source code and more licensed code. It's not open anymore. You need to get the license to run the code. So my question is, are we moving backward, or are we slower? And do you think this is going to block the innovation in DeFi? So how do you think about this statement?
I think people are optimizing for what users want, right? Like Hyperliquid, they're not open sourced. Our matching engine is centralized. Our settlement is decentralized on our own chain. So there are elements of this centralization that exists, but it's optimizing for what people care for the most, which is performance at the end of the day, over decentralization, right? So they want an adequate level of transparency. They want to see where their assets are, but they want highly performant, especially for trading, and low costs and like good liquidity. And then they care about the decentralization aspects, but they care mostly just about transparency and security of assets, right? So I think this is what builders are optimizing for. And I don't think there's anything wrong with it. As time grows and that this ecosystem grows and the users become more sticky, then I think the decentralization aspects come more into play, right? Like with like building out chains with validators, kind of like what Hyperliquid did. We're looking at ZK matching to decentralize the matching engine. So these things, I think it comes with time after users have a certain amount of stickiness in the protocols. And I think there's nothing wrong with it, and it will happen throughout time, assuming these projects all do well, right? So I think it's just a natural evolution of what DeFi is. And the biggest pain point in DeFi has been the user experience, right? And it's still a pain point compared to CeFi. So that needs to be at least on par with CeFi to really like keep the users and have them come back instead of better centralized alternatives.
Yeah, so I guess like we could be like more flexible and more selective as well. And open source is not a must. It's a mindset. However, like it's more on like solving the real pain point from user, right? So yep, that's great. Anyone want to add in? So just come in, right? All right. So to the next question, I want to ask Vinson. We always talk about like, DeFi going mainstream, right? And we always talk about like the first billion of users, right? However, like I think like this cycle, like we have been like dominated by institution and funds and pro consumers, and we have like I don't think like, we have a lot of traction like from retail users. So I guess like in some way like we are far from like the first billion of users. So how do you think about this? Is this like a technical problem? We have like distribution, UX, or like trust problem. So where are the retailers now, and what are they doing in DeFi?
Well, I think this recent cycle, the reason why institutions are coming in a lot more than retail is it's predominantly focused around yield, right? And yield is a very institutional friendly thing. It's not something retail is as used to. And so that's a big reason why adoption is being led by them. In terms of things like the UX, the wallets experiences have improved. There's a lot of new technology now, like account abstraction, that are making things a lot more easier for retail. But it's not that retail isn't here. The way you need to look at it is generally when it comes to any type of investment class, you've got two types of retail. You have those who see it as a long-term investment, so people who might invest in a gold, shares, property. And those people take a lot of time to trust the new industry. They never come in early. They come in when it's more mature, right? They're part of the mainstream adoption phase. And that's what we're starting to enter now. Then you've got everybody else, the early adopters, and those are the casino, the speculators. And that's why you see in a lot of cultures where they have a tendency to have more gambling, especially Asian culture. Vietnamese is a great example of that. That's why adoption is so high here, right? It's 20% versus, say, US, which is only 12%, right? So as people start to see crypto transition from being something that's more of a speculative asset to being more of a stable asset, that's when you'll see this mainstream adoption start to come in, which is really what's beginning now.
And I think another good thing about like retail users right now is like I'm seeing like more and more retail users, they are being more familiar with DeFi right now. So a lot like are using like DEX right now instead of like centralized exchange, and a lot like is providing a liquidity as well, which is like quite technical. But I guess like that's more retail. Actually, like we have like more retail like doing DeFi stuff right now.
Yeah, no, that's a really good point. I mean, the problem with DEXs is a really bad user experience. I mean, as AMMs, that was really easy. But now with CLMMs, people move out of range all the time, and that's the number one complaint. So what we've built is auto rebalancing vaults. So from a user perspective, they simply deposit one asset, and they just make yield, right? Which is exactly the experience that you would expect in Web 2. And that's a big thing that's going to bring a lot of mainstream adoption as these new products start to come out. everybody's always been talking about how Hyperliquid has created the sex experience on a DEX, and they've done that really well as well.
Yeah, so same experience as Web2, but like you got like one of the opportunities in Web3. All right, so next question like to Coby. We have been like comparing like DeFi and CeFi like for a while, right? And I want to talk about like decentralized exchange and centralized exchange specifically. So obviously, like we want to replace CeFi, right? However, like CeFi is still there. Both CeFi and DeFi is still there, and actually, people still like refer to centralized exchange like as simpler and it is faster and it is like cheaper as well. So, however, like I'm seeing like a lot of liquidity moving from centralized exchange to decentralized exchange as well. So I want to ask, like, from your point of view, right, how is like the competition right now between centralized exchange and decentralized exchange, and in which particular aspect that decentralized exchange is better than centralized exchange?
So for that, I always like to take a step back and I take a look at the whole scene, how it was a couple of years back, and the advancement from then until now. The experience, like I think what was mentioned earlier, the Hyperliquid experience, it's very similar to how a centralized exchange is like. So I think that's a major improvement, and many on-chain actually do recognize that. So if you talk about fees and all, and speed, I would say we are on the technological path towards getting it to be a lot more efficient. For fees, I would say mainly it's a product of volume. Like as more and more volumes now, the DEX to SEX volume ratio is kind of like setting new highs every few months and so. So you can see the flows are coming in. When volume hits a certain point, the fees will naturally kind of glide down as the market share shifts a lot more. That's not to say that centralized exchanges will not be relevant. It will definitely be relevant in the future. It's more of a case of decentralized exchanges kind of keeping up the competition, now improving a lot more than it is. And I would say the what benefits does it have? DEX over SEX, which I think for now centralized exchanges still do not have that. I would say it's transparency. You have your assets, you custody your own assets. For centralized exchanges, they are kind of moving towards that, but not quite yet too, by their partnership with their third-party custodians and all. So decentralized exchanges have that natural kind of like edge over centralized exchanges, and of course settlement speeds. If you compare very simply, if you were to send a certain amount of USDC out from a central exchange, out to your own wallet, or even receiving certain amount of assets, sometimes you need about 10 minutes or so to kind of confirm 100% before you can do anything with it. But if it's all on chain, it really is up to the blockchain itself. Like seen within a few seconds, and it hits your other wallet, there it is. And it's all very clearly transparent. Nothing goes wrong with it. So I think those are some of the things that kind of like excited and looking at.
Nice. I have a follow-up question. So how do you think the game is going to be in the next few years? How is the game between centralized exchange and decentralized exchange? It is going to be in few years.
Yeah, I'll say earlier point with it. I think there was some mention about the whole UX flow. I would say the funnel for how we make it accessible to users. I think that still has to be improved. But we see hints of it, how it can be a lot better now. You see like Revolut, like these fintech apps, like the payment providers in a way, they provide access to it. So that's one efficient way of it, because how many of us here use apps like Revolut and all these kind of payments providers? Really a lot. And that could actually be on the path towards that, the next billion users of sort. Yeah.
All right, so I have only 2 questions left. We don't have a lot of time. So the first question I want to ask about the regulation. So because we have been talking a lot about regulation recently, right? We don't have 4 years ago. So especially for the major shift in the regulation, especially from the US. So how is this changing the way you guys are building the company? Or how do you think it is changing the industry in general?
Yeah, it's actually very tricky, because when regulation comes in, there's often a stall in innovation. We're seeing this happening at the moment. For example, there was a lot of NFT sales and checker node sales last year, and everybody stopped that, right? Because of the MiCA compliance, it's forced people to have to conform to them. And now there's the recent regulation that just came out June 30th in Singapore. It's actually a huge problem, even for DEXs. Companies can no longer operate out of Singapore without the MAS license. And it's actually stifling innovation, as it always does. It always comes up to a couple of fast movers to kind of challenge that first, before we really start to see the next wave of accelerated growth. Yeah, I think that's really the challenge. You want to edit?
Yeah, I think in terms of regulation, it's always tricky. So, like for example, Ranger, we've recently launched access, allow access to pre-stocks, like pre-IPO trading, just 2 days ago, and you also can access X stocks, which is in a way tokenized version of like Nvidia and all these that can kind of trade. Personally, I think for us, we do foresee in the next 1 year or so this thing to kind of take off, and when it does take off, regulations will definitely come hard because for example, you need some certain kind of KYC procedures and all. But the silver lining out of it all is that, like for example, pre-Trump era, I think regulations out from the US, they were pretty much very against, I think, a number of these, especially DeFi aspects. But you can see even the past 6 months, the positioning has been flipped almost 180. It's been quite favorable for this to kind of like promote innovation, and US as I think the default leader towards this. It's ultimately going to affect policies around the globe. So I would say we are monitoring it quite closely, but at the same time, we're working with our own in-house legal to kind of see how we can kind of build it out in a more compliant way into the future. Yeah.
Yeah, I think now is the best time it's ever been to be in DeFi. So if you're a DeFi builder, I think you should just charge full speed ahead. An extreme, to put it in an extreme way, you don't have to care about regulations at this point, given how supportive US is. I think now is like the time to grow. That may change in the future, but I think this trajectory, it's not easy to turn back around, and I think now is the time to build.
Yep, thanks for the answers. So we have been talking about the competition, right? The shift from users, the shift from the DeFi industry, and how we are building in DeFi, right? So I only have one last question. What is a single big thing that you wish to see in DeFi or DeFi application in the next 3 to 5 years?
Yeah, I think what everybody's waiting for is this future where whenever you use a crypto application, especially anything in DeFi, it is completely like the same experience you get right now Web 2 with a neobank, right? Underneath, you don't know which chain they're using. All that complexity is completely removed. It's just one click. And from a user experience, that's all that really matters. And that's definitely what's going to happen in the future, and that's where we're heading. And that's really once it's ingrained, the crypto technology directly into the same way that Web 2, we're going to be in a future where crypto is going to be as dominant as traditional Web 2.
Janji?
Yeah, I think the key word here is permissionless. That's one key aspect of DeFi that's not CeFi, and whether it's permissionless listings, permissionless liquidity provision, permissionless building, I think that's the key component that DeFi needs to capture market share, right? It's the build out of the ecosystem and the economics that allows everyone to contribute in a meaningful way and benefit from it, that really would keep DeFi at the speed that it's going and overcome like the UX hurdles and all these hurdles. I think the key word is permissionless.
Exactly, I totally agree with them. In the future, I really hope to see like certain my finance apps like Scythe and all these, where you can go in, you can have funds inside, you can kind of invest in certain, I'll say like in DeFi terms, it's certain vaults. But you as a user, you have no idea about crypto, but all these are being powered by like certain DeFi on chain itself, and I'm just going to click on it and I just put a certain amount of money in it. The strategies are run totally on chain, but there's no need for the users to know because that is I'll say the blockchain technology is underpinning it. So really the UX and the ease of everyone just interfacing with blockchain on a daily basis without knowing it's on the blockchain. I think that's what I'm really excited about. Yeah.
Yeah. So just application and daily work, right? So actually, for me, I want to see more of the payment. single thing like payment, I would see like it's going to be like more popular because it's going to be like the point like where when we have like a lot of retail users and probably like we can get like the first billion of users. Yep. So that's sort of my question. Thanks all of the speakers. So everyone, Vinson from Momentum, Ranji from Orderly Network, and Coby from Razor Finance.